Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across the charts and talking about some of the moves that we might see this week, or more specifically some of the sort of trade ideas that I'm currently monitoring, mostly surrounding sort of a combination of technical and fundamental analysis. But let's start with the DXY. You can see that it recently broke to the north of this downwards trend channel that it's been in. Helped by, of course, stronger than expected US data this week, the continued hawkish tone of the Fed. And, in response to those two, we've seen US yields rising. We've seen markets pricing in more tightening from the Fed. We're now thinking that there's going to be another 25 basis point rate hikes this year rather than just one, which is what markets expected earlier this year. And markets have also been pairing their expectations for interest rate cuts from the Fed as well. In this Bloomberg article that I was reading this morning, it was saying that swaps or US interest rate swaps only expect a 20 basis point reduction from the Fed's terminal rate by the end of the year, compared to a 50 basis point reduction that markets were expecting earlier. So markets, pricing in that higher for longer narrative in response to data developments, and that's helped the dollar break higher. And I'm thinking the technical setup here is very nice because, we've gone above the 50 21 day moving averages as well. We've had a bit of a push higher. We've had a bit of a pullback to this trend line. Now we're seeing confirmation, I think, that we're going to go higher towards this this resistance area in the 105 sort of 70 area. In terms of some of the actual pairs, currency pairs, dollar yen, if the DXY is going to move higher, dollar yen's probably going to break above this resistance area that it's currently probing at the moment around 134.50. Probably going to see a little push here towards the 200-day moving average and the 100-day moving average, which is just above 137 or straddling 137. Euro dollar, I'm not really liking any technical setups too much with euro dollar right now. But, if the DXY is going to push higher, then euro dollar obviously is going to have to come lower because, euro dollar actually makes up about 50% of the DXY, probably going to slip under 105 and test these recent lows, especially now it's given up its 21-day moving average and 50-day moving average, which both seem to be acting as resistance now. Sterling against the dollar, seeing a bit of a pop today. We had data this morning out of the UK, which was quite a lot stronger than expected, but if we're in a dollar strengthening trend now, you can probably expect that this sterling upside is going to be somewhat short-lived. I'm thinking, thing is, we are at some nice support though. The 200-day moving average has been offering good support, 100-day moving average coming in as well, recent lows. But if you ask me, there could be a build-up of pressure, of selling pressure as we bounce around above this support area in the next couple of days and weeks. And then that could lead to a bit of a pop lower, assuming that the dollar rally continues, which is a big assumption. We'll have to revisit this thesis in a couple of days, maybe, depending on how things have gone. But let's quickly look at stocks. Stocks, I'm bearish on now in the short term anyway, because we've had this key technical breakdown. We've obviously had the fundamental developments as well that I've been talking about that's causing strength in the DXY. And, when you're talking about US yields rising, the dollar rising, markets pricing in a more hawkish Fed, that's bearish fundamentally for stocks. So we're out of this bullish trend channel that we were in. We're below the 21-day moving average. So I'm thinking any rally that you see back to 4,100 is going to be nice to sell. And I'm thinking we're probably going to fall back to test the 200-day moving average and this downtrend that was dominant throughout 2022. Gold, fallen all the way back now to a key support area, but could certainly break lower if the dollar strength continues and the US yield upside continues. So let's have a look at yields actually. Where's the 2-year at? In the 460s still, basis points. Probably going to keep going higher, isn't it? It's probably going to, I actually think, if we're really serious about this higher for longer narrative from the Fed, an interest rate of 4.6% on government bonds for the next 2 years, we should probably be close to 5%. But anyway, finally, let's have a quick look at oil here. Struggling now below 21 and 50-day moving averages. Got the China reopening narrative supporting, but then we've got the dollar strengthening, we've got risk assets coming under pressure. It's a tough one. But then the US data has been better than expected. Maybe the US can avoid a recession. You know, we're going to have to see how things shake up. But for now, I think this range with the 72.82 for WTI probably continues to make sense. Obviously, if we do get to the top or bottom of this range, we're going to have to revisit that thesis to see if we're expecting a breakout or if we're expecting oil to find support. But for now, I'm thinking trade the range. And that's pretty much it, guys. That's pretty much the moves and stuff that I'm watching in the market at the moment. I hope you all found this video informative. Hope you all enjoyed it, and I will see you all in the next one.